owning Bitcoin, though. Talk to us a little bit more about that as a hedge against the calamity of war, as a hedge against 40-year high inflation. You are still maintaining it is better than gold, even better than owning real estate.
Yeah, Bitcoin's two things. First of all, it's a non-sovereign store of value asset. So it's like a digital gold, but you can't make any more of it, and you can move it at the speed of light, and you can program it on a computer. And so that makes it interesting to people that would be gold bugs. But it's also an open monetary network. So I can move $1 billion from here to Tokyo and back again every hour. And I can't do that with gold. And so that makes it very interesting to big tech investors. So we actually think in a world where it's very difficult to move physical things around, it's hard to ship things on container ships or fly them around in airplanes, and supply chains are snarled. In that world, what you'd like is a pure block of digital energy that moves on a digital or a big tech network at the speed of light. And so Bitcoin kind of represents the best of both worlds. It's an inflation hedge because you can't make any more of it, and it's a store of value. But it's also a big tech dominant digital network like Google or like Apple or like Facebook. And of course, those have done very well in the past decade.
But Michael, if we're just speaking specifically about Bitcoin, we mentioned comparatives to gold, comparatives to property. It really all drills down to price discovery, or how much people are willing to have its implied value be worth, because even with scarcity, if people don't invest in it, it's obviously going to be depreciative in value. So the problem being, with all of this leverage that is currently within the system that is attached to Bitcoin at the moment, isn't that a risk that you need to wipe out the leverage to have adequate price discovery, more legitimate price discovery when it does come to the price of this asset, because it was incredibly overinflated over the course of the last 18 months?
Yeah, I mean, I think you put your finger on it. The two big liabilities that Bitcoin has been struggling against are the fact that it's been trading on a bunch of different unregulated exchanges that could have up to 20x leverage or 100x leverage, and the fact that it was cross-collateralized with 19,500 other cryptos. Many of them are unregistered securities. A lot of them are very opaque. And so when you have lots of other assets that are being traded on a Saturday afternoon with leverage, that are either they're being lent to buy and sell Bitcoin, or Bitcoin is being pledged to buy or sell these other things with 20x leverage, you're going to get volatility. The industry's maturing right now. And as it matures and it shakes out this leverage, and as we get clarity between what's a commodity and what's a security, and as these exchanges get regulated, I think that the trading leverage disappears and the opacity disappears. And you can already see right now the volatility is decreasing year by year and quarter by quarter in this asset as it matures.